I couldn't count, honestly, for those of us that have sent your expectation. And I hope that as you are writing it, you can see what happened to you. As you are writing the expectation, did you see what happened to you? It makes you to be connected to what you are doing. Everything that you want to do in life, anything that is worth the while for you, if you don't take time to write what your expectation from that thing is, you might be involved in it, but the connection might not be as strong. That is the purpose of that. Also, for us to know that what we are doing, we are meeting expectations of our participants. That is very key as well. Now, let's just be sure that, let me just go through the names. Okay. All right. All right. All right. Good evening one more time. It's our day 2. I think recording has started. Let's now start to, I'm just trying to see that I have another 8 or 9 people that have not joined. And I was just wondering where they are, but they will connect with us. They will connect with us. All right, good evening again. My name is Kunle Majekodumi. I will be our anchor for tonight as well. Yesterday, what we did was very elementary, as I used to say. You just want to know the environment where you will be operating. You want to know the basic things that we need to know. And I want to believe that even for those of you that have ever traded in the past, some of what we said yesterday might be useful for you, okay? It has always been from all our previous classes, the feedback that we receive shows that even as elementary as it seems, it makes an impact in the life of our participants. All right, tonight, we will be looking at something elementary as well, but we'll be involved in a bit of arithmetic. So I want to believe you have your calculator around you. And let me see, where is mine? Okay, I've seen it. I know those children were in my study earlier this afternoon. Okay, so we will be doing some bit of elementary calculation. But as I said, it is elementary calculation. If you are going to be a trader, you must be able to compute at least your profits. That's the minimum I expected you to have. You must be able to compute your profits, no matter how illiterate a trader is. A trader must be able to calculate how much profit he is making from his business. And so tonight, what we'll be doing more will be, how do you compute your profit and loss? How do you also calculate the risk around your business? It's very elementary, honestly. But I know that by the time we finish today, many of you, tonight you won't be able to sleep. If you ever slept yesterday, tonight you can't sleep. And I want you to participate, please. I need you to participate. We will be asking you to do certain things. I need everybody to participate. It's very important, all right? Okay. One other thing that I wanted to tell us, this is something that they did for me, how many years ago? 4 or 5 years ago. And let me just tell you a little bit about it. I had worked for about 27, 28 years before I started retail trading. I spent more than 25 years in the banking industry. I had worked also as a chartered accounting firm. But there's something that I came across when I thought I knew quite a lot. And it was the ability to do what we call self-development. Self-development. I hope I can remember those books right now. There are two books that I will want you, audios, let me put it, that I want you to read. I'm trying to write it down. I want to quickly go and Google it, even before I give you the names. Okay, that is the, okay. There's a book I want you to read tonight. Sorry about that. I didn't write it down. I wanted to get the details down, but it just skipped my mind. It is something that, is it The Power of Belief? Okay, yes. Yeah, I've seen it. That is by Claude. Yeah, Claude Bristol. Okay, I'm going to write it out for us now. 2 audios that I want you to please find time to, for the rest of this week, to find time to listen to. And I'm going to tell you what it did for me. I had been to so many trainings, internationally, locally. I had attended a lot of seminar, conferences, workshops. But of course, many of them were to make you a better person for your organization, of course. Not many of them were to make you personally better to yourself. Not so many of them. Of course, usually what they will tell you is that if you are doing good, I mean, to your employer, that means you will be compensated. That means you are also benefiting from it. But there are certain things that I never knew how to do this. And when I listened to these audios, it changed my perception about who I am. The first one I'm going to ask you to look at, and I'm sure some of you may have, Strangest Secrets. Strangest Secrets. Let's see if I can type it out. Strangest Secrets. Strangest Secrets. It is by Nightingale. It is free online. You can go in and just download this on your phone and listen to it. I think it is about 50-something minutes. Okay. And the second one is the power of believing. I think this one is by Claude Bristol. Okay, by Claude Bristol. These 2 audios, if you have the books, it will be great. If you can get the books to read them. And if you have listened to this before, or you have read this before, I want you to do it again. I have been listening to this audio. I read the books before, but I find it easier to listen to the audios if I'm in traffic or if I'm doing something at home, especially when I am ironing. Yes, I love the magic of believing. Thank you so much. Sorry, Bishop. The magic of believing is what it is, not the power of believing. The magic of believing. Thank you very much. It is the magic of believing. Okay? That's by Claude Bristol. These 2 audios, we have always recommended it for all our participants. And we have a bit of testimonies about them. Someone said, I didn't get the video of yesterday. Mr. Yodele, the video is in the group chats. It's in the group chats. Please just check the group chats. The video is there. Okay. These two audios, please, I need to listen to them. You can, the way to do it, where we have always recommended it is tonight, listen to the power of believing tonight. Listen to that power, the magic of believing, sorry, the magic of believing by Claude Bristol. You can download it. Let me see if I can just quickly show you. Where is it? The magic, not the power, the magic of believing. Where is it? By Claude Bristol. Okay, I think is okay. The one I want you to do is this one. This one is 58 minutes, 21 seconds. This one, if you can see this one, and because there are several versions of it, this one that has 58 minutes. There is one that has been reduced. Listen to this particular one, please. That one would be 58 minutes. And then the one Strangest Secret by Nightingale. I want you to listen to this. There's one, this 35 minutes one. Or is it a 40 minute? I think it's 40 minutes one. This 40 minutes one. Please listen to these two. Alternate it. Listen to power, the magic of believing tonight before you sleep. Tomorrow morning again. Listen to it. I don't know how you will do it. Sometimes maybe 30 minutes or 1 hour, maybe in traffic or something. Just put it on your phone, plug it into your ear, listen to it. Okay, it has a way of changing who you are, because it changed me and so many other people that are around me. Is there anybody in the house that have listened to this thing before? Can someone tell me if you have read the books before or you have listened to the audio before? Anybody? The power, the magic of believing, or Strangest Secrets. Anybody that's listened to it or read the books before? Anyone? Strangest Secret, Patrick. Awesome. Very good. Anyone else? Please read it again, or the audio, listen to it again. And tomorrow we will spend the first few minutes just to take so we are going to look at the magic of believing tomorrow. So listen to it, then tomorrow we will spend the first 10 minutes to take what you read. You just take 1 or 2 or 3 people to tell us all right. Let's go. Tonight is full of action. We are talking about pips, leverages, spread, stop loss, loss sizes, take profits tonight. These are some of those basic things that we talked about in the beginner class, but we are going to look at it a little bit more tonight, okay? The objective is very simple: to understand this basic concept in trading and to build a strong appreciation for that. I need you to know these are very important things to do. And we said yesterday that our intention is to make us have the confidence to be able to stay in front of your screen and be able to trade confidently. That is what we want to make you. That's the transformation. And we said our job is to trade. That's what we are going to be doing here. Our job is to trade. Buy, sell, what to buy, when to buy, how much to buy. How do we protect our buy? How do we protect our sell? All those things are what we will be looking at, in the course of this training. And then one other thing that I didn't mention is that I said a bull or a bear. And I said that, a bull is those traders that are into buying, and then bears are those that are into selling. So when I say I'm a bull today. That means I am trading to buy today. Okay, I'm trading to buy today. And if I'm saying I'm going bearish today, or I'm a bear today, that means I am selling today. So bullish trading means you are buying. Bearish trading means you are selling. It's basic concept. And I'm sure if you listen to business news, you will hear this coming forth usually. Just give me 1 second. Let me just take the WhatsApp, please. Just give me 1 second. I'm so sorry. I'm so sorry about that. Let's continue. So bullish trading is when the market is trending upward. So that means we say the market is bullish. Yeah, we say the market is bullish.
Yes, wow.
Hey, someone is disturbing us, so please mute yourself. Who is that? Oh, Emeka, that's you? Okay. And when we say you are in a bearish market, that means the market is trending downwards, Just for you to know this concept, it's nothing so fantastic about them. We had said something yesterday that we will be looking more at the currency market. And because most of us, 90% of trading will be around currency most of the time. So we will, as I said, we'll spend a bit of time looking at the currency trading on its own. So I want to start by telling us currencies and the currencies pair. When we say currencies, these are the usual, the monetary denominations that we use in payments for goods and services, and usually acceptable among a group of people. So in Nigeria, Naira is acceptable to us. Maybe in US, they use United States dollar. In Canada, they use Canadian dollar. In Australia, they use the Australian dollar and all the rest. So whatever, so currency is that means of for exchange of value in any country that is accepted. In general, in trading, as you are trading right now, the 8 most traded currencies that's in the currency markets are those one of the United States of America, the Canadian dollar, the euro, the British pound, the Swiss franc, the New Zealand dollar, Australian dollar, and the Japanese. These 8 are what are generally acceptable. I mentioned these to us before in the previous classes. But as I said, it doesn't mean that this is the only currency that you can trade in. That is not, it's not the only currencies. Or they are because here we don't have some of the bigger economic like the Chinese economy, their currency is not here, the yuan is not here. We don't have the Indian currency is not here, and so on and so forth. So what we have here basically is just those traditional currencies that the market had accepted as the major currencies, and it is always debatable. I've seen a lot of people asking that this is just the Western world that have decided that this is what the major currencies are. Well, that is not your problem. But when you are trading, you will be trading in pairs. So you don't trade just one currencies. You'll be trading in pairs. So you can trade United States dollar against Canadian dollar, the euro against Japanese yen, Australian dollar against New Zealand dollar, whatever. You have to trade in pairs. It's just like when you are trading any other item, you might move from one currency to the goods. For example, if you are trading gold, you will trade either from dollar to gold and then back to gold, back from gold to dollar. If you are trading commodities, you are trading the cocoa, you will be using a particular currency to trade, and then moving, when you sell that cocoa, you move back to that currency. So every time it will be in pairs that your trading will be. All right. So, and how many currency pairs do we have? There are many of them, but I will talk about some major ones today and how we classify currency pairs. I will talk about those ones shortly, but know that when we talk about currency pair, this is basically what it means. GBP, USD. There's someone that is not muted here. Ngozi. Okay. So we are talking about pairs, GBP, USD, and they will always have a price. They always have a price. And GBP in this case is what we call the base currency. USD is the quote currency. Okay, what it means is that 1 unit of GBP will be exchanging for this amount of USD. I'm not saying this is the current price. This is an old slide. So this particular slide is old. So it might not be the current slide, but this is what it means. So the base currency is 1 unit, and it's going to be traded for whatever that you have as the price here of that quote currency. Okay. Of course, there are so many currency pairs. In euros, we have all these pairs in euro. In GBP, we have these, and all like that. You will get to familiarize yourself with it. Let me just show you. I showed this one before. Let me just make sure that I also make some of us, where is it now? Okay, I know I showed this one. I said that when we say GBP USD, we are talking about £1 exchanging for this amount here, or we say in Naira, it is $1 against this thing. And whenever this particular way it is written is usually the same way, you can't change it. You can't say it is USD GBP. It has to be this. Otherwise, this particular rate that is being quoted will not mean the same again. So you will get used to it. For example, if you see how these are written, you see how these are written. Euro GBP. It is not GBP Euro. It is Euro AUD, not AUD Euro. It is USD CHF and not the other way around. You will get used to it over time. Okay, you get used to it because that is very key to understanding the way the market is run. What are the major currency pairs? Those currencies that have USD among the major currencies. Those currency pairs that have USD attached to them are the ones that we say major. So when you have Euro USD, USD JPY, GBP USD, USD, all those ones are the major pairs. Minor currency pairs are those major pairs, major currencies that doesn't have USD attached to it. So when you see, for example, AUD NZ, that is not a major one. We call that one a minor. When you say CHF JPY, it is called Euro AUD because the USD is not part of that pairs. That is what we are talking about. That's what we call a minor currency pair. An exotic currency pair is when a non-major currency is attached to USD. So when you have USD NGN, that's an exotic currency pair. When you have the currency pair of South Africa, for example, is Rand. And if you attach, and the way it is written is ZAR, okay? So if you see USD ZAR, it is an exotic pairs. So any of those currency pairs that does not have, that are not a major currency, but are now attached to USD, we call them exotic currency pairs, okay? All these ones are very fundamental, you will get to know them. But one of the questions that we always come up, and I'm sure someone probably, if you have been trading, you want to ask, which pair should I trade? What should determine the pairs that you should trade? There are so many pairs to trade. Picking the right currency pair to trade depends, number one, on your experience, okay? If you are new to the game, the best thing is to stick to the familiar one, okay? The familiar one. Another reason is that there are certain things that are peculiar to certain pairs that will make you to want to trade them. Number one is when we say the volume of trading. There are some pairs that there is no volume in trading. And when we say there is no volume in trading, you know what that means? It means that there is no depth in it. You might enter into those trades and there will not be any major movements in that price. You remember when you are trading, what you want price to change. That's what you are doing. If I sell, my expectation is that price should come down. If I buy, my expectation is for price to go up. Now, if I buy and price is just standing there because there's nobody in the market, what am I doing there? What am I doing there? Nothing. But so there are some currency pairs that the volume of trading is very weak. And so it does not allow you to be able to come out of that market quickly. You might want to avoid those ones, okay? But you want to be in the market, you want to trade a pair that there is volume of trading. What means that there's so many buyers, so many sellers in that market, things are happening. We say there is high liquidity in that kind of market. Another thing that you want is a currency pair that the spread is not too high. When I talk about spread now, I'm talking about the commission that you are going to be paying to your broker. For every trade that you take, your broker, remember you are trading on the platform of a broker, they will take a commission from you. The brokers will take a commission from you. Now, that spread is what we say is the commission. Now, if the spread is wide, you might want to avoid trading those because you know what it means. If you enter into a trade and the spread is 15 pips, what it means is that before you will make a profit in that trade, you must first make 15 pips that you are paid to your broker. Okay? So it is when you have made that 15 pips, when you made the 16th pip, that means you are now in profit. You are just making money for yourself. Otherwise, all the other works is just for your broker. But there are some currency pair that the spread there is just 1 pip or 1.5 or 2 pips. So you can imagine if I enter into a trade, I have paid my broker the commission, the 2 pips or the 1 pips, 1 pip. Once the market move 1 pip or 2 pip in my favor, that means I have covered the commission I paid. Anything thereafter is my profit. So you want to go into a trade that allows you to make money quickly, but don't get me wrong. There are some pairs that the spread is wide, is big, but when they move very big as well. So if they move in your way, you could make 200 pips from those kind of trade within a short period of time. For those people that love trading exotic currencies, okay, that is what they are after. They know that when the market move just in their direction, the movement usually very heavy and they can profit from it. So it depends, as I said, on your experience. If you know what you are doing, you might not follow this. But if you are new to trading, I beg you, please follow me. Good daily movement means there is good movement in that pair in a day. What are you doing in a trade that when you enter into that trade, there is no movement? It just go up, few pips, come down, few pips, come down. That means you will be in that trade for a long time. You want good movements in that trade that you have so that you can, and you want to go in your direction, of course. That is what's better. There are some currency pairs on a daily basis, there is averagely 200 pips movement up and down that will happen in a day. And there are some currency pairs in a day, you'll be lucky to get 20 pips. You'll be lucky to get 20 pips in a day. So you might not want to be in a trade that gives you that the movement is very weak, is not good, okay? So those are the things that you need to consider. So number one is the volume, the liquidity in that market, that particular pair, the spread, okay, and the movement, the daily movement in the prices. Okay, those are the things that you want to take, okay? And over a period of time, you understand it. Let me quickly just go back to pips. We'll be talking about pips. If you are in the basic class, of course, you have a little bit of understanding. Pips, short for percentage in points, is the unit of measurement to express the change in value between two currencies. So let me go back to this particular one, my slide here. Let me see if I have yeah. I'm looking for something. Sorry, just wait for me. I have thrown it away. I've thrown it away. Okay. Let's use this. I use this. If you have seen my screen, I use this a lot. Now let me just quickly just go this way. Okay. And let's just imagine that you are in a trade, you are trading. Prices, what you want prices to go up and down, Abi? That's what you want. So let's assume that you are buying and the currency pair may be, let's say, GBP. By the way, I didn't tell you this. You see, all those currency pairs that we talked about, all those currency pair that we talk about, all these ones that we talked about, instead of just using all your mouth to be calling them Euro JPY, Euro CHF, Euro USD, you can use the abbreviate USD Euro USD, you can just say EU. The first letter in the first pair, the first currency and the second in the pair. Euro CHF, I mean USD CHF, it is UCHF. Why we call this on UCHF? Because there are two that have C, the Canadian dollar and the Swiss franc. They both have C. So you can't say UC because you know which one it is. Some people say this one is UF and this one is UC. But me, I say UCAD, UCHF, GU, NU, AU, UJ, ECAD, EA, AN, AJ, Chef J, all those ones, just like that. So those are just what you can use to just abbreviate. Now, so we want to just teach some people how to calculate pips. And remember, I am taking this assuming zero knowledge. So for those of you that know how to do this one, just relax for us. You are doing GBP USD, you are trading, and it could have been anything. It could be you are trading in gold, you are trading in cocoa or cotton or rice or soya beans. Okay, there will be an entry price, the price that you will enter the market. Okay, so let's assume it is 1.2356. It is usually about 5 digits that you will see in that will be quoted. But please, normally when we do computation, we only take the first, after the decimal point, we take only the up to the 4th digit. So the 5th one, which is called the pipettes, we don't consider it. We normally ignore it. So I'm telling you this one for the first time, you know, in case I had not mentioned it to you. So we only consider for the first 4. So let me just remove that, that 8 first, not to confuse anybody. Okay, not to confuse any one of us. Let me remove that one. Now, let's say you enter, you are buying. So your entry price is this. When you close the market, of course, that means you sold. So let me say closing price. If it goes up, let's say you made a profit, so it goes to 1.2376. For example, the difference between these, which you can calculate yourself, will be 0, that is 0.00. Let me just follow what all of you will be doing. 1.2376 minus 1.2367. That will be 0.0009. Okay? I hope you got this. Let me cancel this so that it will not confuse anybody. This is what you entered. That's your entry price. This is what you close with. That is the closing price. You enter at this rate, you close at this. And you can see that if you are buying, because the entry price is lower than the closing price, it means this pip, which is called 9 pips now, is a profit. You buy low and you sell high, you will make a profit pips. If I am selling, and this is the price, this would have been a loss. Because in selling, I should sell high, let's say it's 1.4564, and I'm selling at 1.4523. I will sell high and buy low. Okay? And the difference here is 1.4564 minus 1.4523. That means 0.0041. That makes it a profitable pips profitable trade for me. That is 41 pips. This is how pips is computed. I'm telling you, it's very easy. When you sell, you are selling I. Let me show you this. Where's my bag of rice? Yeah, this is my bag of rice. When you, let's say you are selling, you are trading in rice. If you buy rice at 18,500, for you to make a profit, it means you must sell higher than that to make a profit. If you are buying, you buy at 18,500 to sell, because the next thing that you want to sell the rice, you must sell higher than that for you to make a profit. But peradventure, if you have to sell before you buy, what it means is that you must have sold high. I don't have the rice in my store, but I have a customer that wants to buy 10 bags of rice. I know I can get it from a friend of mine. I don't have it. So I can tell my customer, yes, I have it. I don't have it here now, but I have it in my store. My store, not too far from here. I can go and get it. Are you ready to buy? The price is 18,500. If the customer agreed, I sell at 18,500. I know already that I can get it from someone else at 18,000. So I buy back. So you enter a sell high, you close low. That is how to make a profit. If I make the mistake, let's look at this particular person. Perhaps he knew that the price of goods is 18,000. He has sold at 18,500. By the time he goes to his friend says that, I have finished selling all those of 18,500. Now the price is now 19,000. What has happened to this friend of ours now? It's a loss. If he has collected money, I know some of you will be saying that you should just go and return the money and say there is no rights. But we are talking about formal business right now. He has entered into an agreement and he must make that agreement to come to be. Okay? So that is the very basic principles that I need you to know about this. So when we talk about trading, we talk about pips. When we talk about pips, we are talking about the movement of price from when you enter and when you close it. Okay? So a pip is known to be the smallest numerical price move in the exchange market. You remember that the price of dollar is 1 point something. We are not looking at big movements, just those small movements. Even, do you know that just 2 pips can make a difference, can make so much money for some people, depending on what you do. And I'm going to tell you how it works shortly. Just 2 pips, a movement, and 2 pips can happen as you just blink your eyes like this. Just blink. 2 pips could happen in a trade like that. So when a price change on the exchange, it is generally referred as a pip or pipette change. I will not talk about pipette. I told you the pipette is the 5th digit. We normally ignore that. Ignore that for now. Let's talk about pips up to the 4th digit. So we are referring only to up to what? Up to just the 4th digit. The 4 digits. 1.4564. After the decimal point is 1, 2, 3, 4. Okay? That 4564. The fourth one, that's the four there, is where your pips start counting from. And you can see that when I did the subtraction here, I got 0.0041. So it is from behind I can start counting, and I'm sure you will get this one as we go along. I'm sure you will get it. Okay, so that is what a pip is all about. Now, I want one or two of you to help me to do this computation. Please, I want to do this computation. Look at that GBP USD, 1.2403, 1.2491. Can someone just calculate what the pip is there? The entry price is 1.2401, 1.2403, sorry, 1.2403, and the closing is 1.2491. What will be the pips? Fast finger. Who wants to tell me quickly? Who wants to tell me this quickly? Let me see my chart.
88.
0.0088.
Yeah, that is 88 pips. Thank you so much.
Sure.
Now, thank you very much. Now, I need you to understand that these are very simple computation. That is pips.
Okay.
That is what it is. Now, look at the second one, the Euro USD, 1.0831 is your entry price. Now, let's assume that you made a positive 45 pips. What do you think your closing price will have been? You enter as 1.0831, you made a positive 45 pips. What will be your, what will have been your closing price? Can someone do that for me and type it in? If you can do that, 1.0831, that is your entry price. And now you have made a positive of 45 pips. So what will have been your closing price?
1.0876.
Okay. All right, now type it in. Let's type it in.
1.076.
Thank you very much. Please, now let's be typing it in into the chat room. Let's type it into the chat room, okay? Is there anybody that doesn't understand this? Oh, someone says 76. No, it can't be 76. It can't be 76. It is one Scholastica. Look at it again. What we are saying is you are going to give me the full price now. We are not abbreviating anything, okay? You are going to give me the full price. That is 1.0876, not just 76, okay? Now, and it is not 09776, okay? It is not 09, a typo error, okay. All right. Maybe you are working already on the USD CHF. Now, can someone do the USD CHF as well? Please, that is USD CHF. Your entry price is 0.9707. 0.9707. What will be your pips if you close the price at 0.9672? 35 pips. Awesome. Hey, who is Techno? Hey, you have to put your name. How did I miss you? Who are you? Please, you need to put your name on. I did not allow anybody without a name to come in. I'm sure one of my Oga must have allowed you in. Please, I need to have your name. We want to have names, please. If your system is reading Techno, come on. I'm sure that is not your name. Please just do the amendment. How do you do that? Let me just quickly tell you, please. If what you do, go to the participants, look for that name that is showing for your system. In this case, that came on Techno. Click on it, and you will see rename. Click on rename and put your real name there and enter so that we can know who you are. Okay? Thank you very much. Because tomorrow I might ban your phone from coming in. Okay? I might ban your phone from coming in, and that wouldn't be nice. And once I ban a phone, that phone will not be able to enter this class again, unfortunately. So I'm always very careful not to do that to anybody. Please, let's have your name. If your name is Techno Kemon, because we don't want to have any unauthorized persons in this house. If your name is Techno Kemon, I'm asking you, please check now. Check now. before I ask them to log you out. Thank you so much. Let's continue. So for the 35 pips? Okay, yes, 0.0035. Thank you, Ngozi. Thank you so much. Thank you, Aduo. Yes, that is what it is. So I'm going to send a lot to you to practice with. Don't worry, I just want to be sure. Is there anybody that doesn't understand what we are doing? Is there anyone? If you don't understand, just say no. Just type no. Remember, this is very basic, and I want you to know it. If you don't understand what we have done, please type no so that we can go through it again. No. Awesome. Thank you very much. Let me go to my Excel sheet. Let me go to my Excel sheet, and I'm going to just try and what we are saying, sir, is that when you are trading, you will enter with a particular price. Let's say you want to buy cocoa. There is a price for cocoa in the market. And what you do, remember you are going to be on the MT4 of any broker that you have chosen. Your broker will have given you what they are selling and what they are buying, the price. That's their bid and offer. So if you are buying, that means you are the broker is selling to you. The market is selling to you. Okay? The market is selling to you. So you will buy, that is your entry price. You are bought. Your expectation is that the price will go up to sell. But whatever that happens, I don't know what will happen. Whenever you close that market, there will be a difference between your entry and your closing. And how you compute it is just like this. So let's say it is 1.4564 that you entered, and you close at 1.4528. If you look at the difference between these two, it is 0.0041. Did we get that, Mr. Yodele? Please chat with me. Chat with me. Did you get that? And Messi also, and Mutiu, did you get this? I want to just get confirmation. Did you understand this up to this point? That it is just the difference between what you enter the market and what you close the market. Your entry and closing, just the difference. That is what pips is all about. There's no magic about it. The only thing is just for you to do I know some of us, the moment we see figure, oh my God, our brain just ceases to function. It's like, hey, mathematics. No, this is nothing. I'm sure that as a trader, you do your calculations. This is how it is, sir. And that is what we have done on this one as well. That's what we have done here. We have the entry price and the closing price. And your pip is just the difference between these two. We arrive at 88 pips here. And this one, we said in this particular one, it is 1.0831. And we said the pip is 45 pips. Let me just quickly show you how this is. Maybe this is the one that is confusing you. We entered at 1.0831. Let's say we don't know what we close at, but we know that the pips is, if we say it is 45 pips, what it means is that it is 0.0045. Okay? So, and if it is positive, what it means is just add it to this and you will get what we close with. Okay? Add it to that and you get what we close with. If you add the closing, because we said it's a positive one, okay? It's a positive pips. So you add it to your entry price, which is 1.0876. I hope you get that one. It's very simple. What did I do? What I did, let's see. I put 1.0831 and I added 0.0045. If you do this, you will have 1.0876. It's very simple. Is that okay now, sir? I don't want to leave anybody behind. Is that okay now, sir, Ama? Is that okay now? So that we can continue. All right. So that is what I'm going to allow you to do this on your own. I will send this to you, and then you will crack your brain to be able to do this one. Now let's go on. Let's move on. Tonight, we are going to start slow, but we will push on. There's quite a lot that we need to do tonight. Let's talk about spread, and I've explained what spread is to you. Spread is the difference between your broker bid and ask price. Your broker bid and ask price. So when you are trading, your broker will give you what they are buying and what they are selling. Whichever one you choose, okay, the difference in that particular pair will be charged to you as their own commission, okay? Usually very small, but in some cases it may not be. Let me show for those of us that were not, let me just quickly show this on an MT4. I'm going to go into an MT4. Where is this zone? Okay, let me just share from my phone here. And I'm going to go into an MT4. This is an MT4. This is an MT4. And you can see that we have the bid price of the broker and the ask price. That is the buy and sell of the broker. Between these two, you notice that there's a small difference there. There's a small difference. If I want to do it, I can make my phone to do it to be showing me those differences. What do? I go to my settings. I go to my settings and I check that advanced mode up there. I check it. If I go back now to my page, you can see that I have added some other things to it. I've added some other things to it. What do I have there now? You can see that I have at the right side, you see spread under the pair. That 23.0052 is the time. So don't worry yourself, just the time. And that is the MT4 time. Right now, it is 21 hours in our, but that one is I can amend it to show my local time as well. But that is just the time. Under you see the spread. What you see there is 14. And that is because they are computing based on 5 decimal places. But if you calculate based on 4 decimal places, it will have been 1.4. Okay, 1.4. For AUD USD, the spread is 1.5 or 1.6 as is shown right now. Now you can see some, so most of them are doing 1 spread, I mean 1 pip spread, 1 pip spread. But if you go down, there are some that are higher than that. You can see there's the 5.9 copper. Copper is 5.9. Don't be lost. Don't be lost. I'm just explaining what you are seeing on your broker, on your MT4. If you can see my screen very well, I'm sure you will see what I'm doing. I'm just telling us that your MT4, your trading page will show you these two for everything you are trading. They will give you a buy and a sell. And there is a small difference between the buy and sell. If you look at it yourself, you see there's a small difference there. That difference is what is called a spread. That is all. That is what you call a spread. And we said that spread is what your broker will charge you. If you buy, the difference is what they will charge you. If you sell, that is the same thing. So for that particular pair, every pair has its own spread. And I'm showing you that there are some that are higher. Look at cotton. Cotton is 12.9. 12.9. copper is 5.6, and so on. There are some pair that have larger pair than the other. Okay, and remember what I mentioned earlier on about spread. You see, a spread determines because a spread is what you have to work for before you start making profits. The higher the spread, the probably the less likelihood that you make more profits. Because if I am entering into a trade and the trade is saying that the spread is 10 pips, 10 pips. If I make 15 pips in that trade, the broker has taken 10 as their commission. I've only made 5 pips. Meanwhile, if someone has entered into a trade and the trade is only 2 pips, the spread is only 2 pips. If that person makes 10 pips, he has made 8 pips extra for himself. So you can understand how the impact of spread on your trading right now. And let me tell you, spread is not the same for all brokers. Even for the same currency, for example, in this particular currency pair of Euro USD, which is about 1.4 pips in this one, that 14 means 1.4 pips. Another trader, that is another broker, might have it as 2.1. Another trader might have it 1.1. So they are not always the same. So for you that you want to trade, remember what I said earlier on, because the spread matters a lot to you. You want to trade with a broker that their spread is not too high, especially for the kind of currencies that you'll be trading in. Because you can be trading on a particular platform of a broker, and the broker is charging you 3 pips as a spread for a pair, and not your friend might be trading on the platform of another broker, and that broker is only charging 1 pips. If both of you make 7 pips in a trade, your friend will have made 6 pip profit, you will have made only 4 pips profit. I hope you understand that. I hope that is clear. Is that clear? Is there anybody that doesn't understand what I said? Spread. That is what we call spread. Yeah, it is clear. Thank you very much. So that is what spread is all about. It's just your broker, your broker, what your broker is offering, the bid and ask. If you take any one of them, they will charge you a spread. And that's where the spread is coming from, is what I've just shown you right now. Okay. Now, I said sometimes the spread widens. For some of you, you will understand this later. It's that same spread that is reading 1.4. At some point, it can go to 5.0. What makes it to go high? So usually when there is so much volatility in the market. When there is a fundamental news in the market, it can create a lot of distortion. So what your broker do to protect themselves, they widen that spread. You will understand it a lot more. If I spend 10 minutes explaining to you right now, it will eat into our time. But it happens, that spread widens. Sometimes even towards the closing of the day, around that 9, 10 o'clock, when the market is closing on a Friday, or when the New York market is closing, you will see some spread widening. They widen because at that time there is a bit of volatility in the market. So what is a good spread? I've explained that to you. A good spread is a small spread. You don't want to enter into a trade that is charging you very wide spread. Okay. How does spread affect your profits? It's the same way I've just explained. You have to pay for your broker fee, that commission, first before you start calculating your profit. Okay. That is how it happens. So if you enter into a trade and the trade is charging you let me say 5 pips as a spread, and another person enter into that same trade on a different platform and it's only 2 pips, that is the spread. That's the commission they are paying. If both of you make the same profit, the same number of pips as at the close of the trade, one person will be making more money than the other. That is what spread does to you. So you should always go for the lower of spread. Let me summarize what we have done so far. We said there's a currency, the base currency is the first one, the quote currency or the counter currency is the second one in the pair. Okay, the base and the quotes. And we said your broker will give you the bid and the ask price in a pair. For every pair, they give you the bid and the ask price. Same thing as the buy and the sell price. Okay, that means just like I showed you on that MT4, there are 2 quotes for every pair. That is what it means. The difference between the bid and the ask price is what we call the spread. So in this case, it is 2 pips, and it is this. That means the spread is 2 pips. All right. So let's move forward. We have done very well tonight. Now let's talk about leverage. I will not spend too much time talking about leverage tonight because it is what you will familiarize yourself with as you go along. But leverage is what you will indicate when you are registering with your broker. You will have to indicate to your broker the leverage at which you want to operate. It is just like the credits that your broker will be giving to you. So when you enter into a trade and when you open an account with a broker, many of us, we don't have so much money. No, I don't know how many of us we want to trade now, we put in $10,000 in your account. Maybe many of us just be putting $1,000, $500, maybe $2,000 to trade. Now, in this market, your broker can now avail you some level of credits that will multiply the buying power of that your capital. So if you have a broker that offered you, let's say 1 to 200, that means your leverage is 1 to 200. It means if you have a $100,000 account, that is the capital you put in, you will be allowed to have a purchasing power of 200 times that amount. That is $200,000. Now let's assume that ordinarily when you trade, you can make a 1% profit. Now, if you use your $1,000 to trade and you make 1% profit, 1% means you have done $10. 1% of 1,000. But let's assume that you now use your leverage to the maximum. That means you add trade of $200,000 and you still achieve that 1% in all those trades. You know what it means? It means that you will have made $2,000 in that your trade. You see? But of course, as good as it has its own back side as well, because the same way it can work for you, it can also affect you. If the market did not go your way, it can also quickly make your capital to be reduced. And that's why I always tell people, we want to go for a very high leverage because you want to make money. You have forgotten that you are not in control of this market. You are not in control of this market. This market can go against you. It can work, and it's not your fault. It is just the way the market is. An event, earthquake can happen in the country. Let's say you are trading oil, you are trading crude oil, and then suddenly there is a sudden bitter exchange of words between the American government and Saudi Arabia, for example. And Saudi Arabia decided that they are not going to be selling oil to America and its allies. Do you know that you might be having your dinner and this event will take place within an hour, and market will change instantly? Your trade might be going in profits, but when those news come in, it can reverse or amplify your profit depending on what you are doing. So what is the best leverage? The best leverage depends on, number one, the capital you own. If you have low capital, your capital is low, and you want to be, you have a bit of confidence in your trading, you might want to do a higher leverage. So you can go to 1 to 200, 1 to 100. There are some places they won't allow you to do even beyond 1 to 5, 1 to 50. Okay. Also, depending on the strategy that you are using, if you are in a position trader, means someone that is trading on a pair and you are trading for a long time on that pair, you might not probably need so much leverage. You might be okay with 1 to 100. But if you are a scalper and you want to, these are people I call eat and run. You just want to come into the market, take a profit, small profit, and you are running out. You just want to make 3 pips, 4 pips, 5 pips in a trade. So what do? You increase your leverage and your lot size. And you can, so when you make 3 pips like this, you have made probably a significant amount of money. But you must know what you are doing to be willing to take that risk. So how leverage can backfire is what I've just explained to you. It can backfire. If the market did not go your way, it can work against you. How to manage your leverage risk? You use stop loss or you use trailing stop. We'll talk about trailing stop later, okay? You keep your position small. Let your lot size not be too much for you. And then you limit the amount of capital for each position. Don't put too much capital in each trade that you are trading. All right. Okay. So Forex leverage can be used successfully and profitably with proper management. Now let's talk about lot size. And I know that this area I will need attention of every one of you. I want to believe that thus far we are understanding what I'm saying. We are talking about the fundamentals in trading. This is what you need to know. In case you seem lost, I've told you, don't be afraid. Many of you are hearing this for the first time. What you need to do, just come back, listen to this again, listen to it again. You will get acclimatized to this concept as you listen to it more. Lot size is the smallest available trade size that you can place when trading the Forex market. Okay? It's what it says there, it allows you to trade in lot size. What is a lot? A lot is like a bundle, bundles of trade. So when you are buying eggs, you buy eggs in crates. When you are buying beer, you buy it in carton. When you are, so all those things that have lots, they have lots. That is what they call lot sizes. So when you are trading also, you can trade in lot sizes. Lot sizes is what determines the amount of risk you are placing on your trade. Okay? It determines the amount of risk you are placing on your trade. So we have normally 3 lot sizes, but I know some people talk about nano lot sizes, which is the one that has 100 units. It is 0.0, it is like a pipette. It's like a pipette. But as I told you, because we are not considering pipettes in most of what we are doing right now, we will ignore this. Micro lot sizes is 0.01. 0.01, that means 1,000 units is micro lot size. That means your trading is in 1,000 units. Okay? If you are using mini lot size, your trading is in 10,000 units. That means 0.1. If you are trading in standard lot size, that means you are trading in 100,000 of units. That is 1.0. Okay? And that means that the higher your lot sizes, the more the more that you can make in that your trade, or less, or the more you can lose in that your trade. Okay, and I'll do something for you. We are going to look at something practical right now. And you see, micro lot sizes, mini lot sizes, standard lot sizes. Micro starts from 0.01 to 0.09, mini from 0.10. There's a difference between 0.1 and 0.01. Please, let's note. 0.01 means you are trading, and for every pip that you make in that trade, you will receive 10 cents. 10 cents, you know what it is a fraction of a dollar. If you use 0.02, it is 20 cents. If you use 0.09, it is 90 cents. If you enter into a trade and you make 20 pips, you will multiply it by the dollar per pip that you have registered. Remember, your lot size is like a contract size that you are entering into your trade. So you will indicate it at the beginning of the trade. When you are going into the trade, you will state there, I am going to this trade with 0.02 lot size. That is the contract size. What that means, 0.02 means that for every pips that I make in this trade, I will receive 20 cents. So if I make 20 pips, it is 20 pips times 20 cents. If I make 40 pips, it is 40 pips times 20 cents. That will be $8 only. I hope you understand this one. Now let's look at meaning. If you enter, you set at the beginning of your trade that you are using 0.1. It means for every pip that you make, it is $1. So if you make 20 pips, it is $20. That is $1 times 20. If you have used 0.5, it means it's $5 for every pips you make. That means if you make 20 pips, that is $100. That's the profits you have made. So we are talking about how much you will make in a trade. That is, it depends on the lot size and the pips that you make. If you use standard lot size, 1.0 is $10 per pip. So that's 20 pips will have fetched you $200. So you can see something here. The higher the lot size, the more money you will make. Of course, the higher the lot size also, the more money you can lose. And I can just quickly show you this on this. I hope you can see this. Let's say Joshua uses 0.05 lot size. Scholastica used 0.1 and Sydney used 1.0. What it means is that for every pip that Joshua will make in the trade, it will earn 50 cents per pip. For Scholastica, she will earn $1 for every pip using 0.1. For Sydney will be earning $10 using 1.0, $10 per pip. Now let's assume the three of them, they have the same amount of money, $500 to trade. They both made the same amount of pip. They entered the trade at the same time, they closed at the same time. So they both earn 33 pips. Now what will happen is that Joshua will have earned 33 pips, will have been 50 cents, because Joshua used 0.05, 50 cents times 33 will have been $16.5. Joshua will have made 16. That means Joshua will capital will have increased to $516.50. Scholastica will have made $33 because 33 pips times $1 is $33. That means our own capital will have increased to 533. Sydney, who had used 1.0 lot size, will have made $10 per pip. That will have been $330. $10 times 33 will have been $330. and Sydney capital will have increased to 830. Okay, that is if the trade had gone your way. What if this trade had not gone your way, but it is a reverse? It is a loss to you. It means that the capital of Joshua will have reduced by only 16.50, which will have been $483.50. For Scholastica, she will now have $467 because she has lost at $3. For Sydney, Sydney will have lost $330 and it will be left with only $170. So you can see that the way that it can work for you, if the market is in your favor, is the way it can work against you, the market goes against you. So what does this mean now? Let's come back to the house. What does this mean now is that you must be able to strike a balance between what should be your lot size when you are trading. What should be your lot size when you are trading? You know that if you don't have a lot of capital, you have to protect your capital. Don't go and expose your capital to unnecessary risk. If you are trading with $200 and you start to use a standard lot size, what it means is that if the market goes against you, you can wipe off your capital in one trade. You have to strike a balance. What we will tell you is that you have to learn the habits of growing steadily, slowly. Don't risk more than 1%, as we normally say. So only risk only 1 to 2%, maybe maximum 3% of your capital per trade. Such that if that trade ends up being a loss, you will still have room to come back and take another trade. But if you enter into a trade, you want to go for the jugular. You want to double your capital within 1 week, and you hit a brick wall in your trade, you could lose all that you have within 1 day. And I'm sure many of you have heard of traders that they enter these markets and they lost everything within 1 week. What we will teach you is how you can protect your capital, that you can continue to trade, that you will never lose your capital. When I'm talking about is that you will not lose your entire capital. You will lose some trade. Of course, you can lose some trade. Your capital will reduce maybe from $1,000 to maybe $900 or $800 or $600. But by the time you are losing and you are only risking small, you will know that this thing is not in your favor. What will you do? You will stop trading. You will go back to the academy and learn more and improve yourself until you are trading and the number of your profitable trade is more than the number of your losing trade. That is when you are increasing your capital. That is what this means. Okay, I want to believe we understand. Is there anybody that doesn't understand what we have said? Is there anyone? Can you please throw more light on loss? I believe I have done that right now. Couldn't get you when you were explaining what leverage is. Okay, I will come back to leverage. Don't worry, we still talk about leverage. All right. So I want you to understand that loss sizes, these are very critical thing in trading. You must understand what loss sizes is. This thing I've shown here, over time, you don't even need to be seeing this. You will know it automatically in your head. All right. Now let's look at the relationship between leverage and loss size. Now, someone was asking me, what is the kind of leverage? Okay, let's look at this. Let's do this. Let me just come back to my Excel sheet. Let me come back to my Excel sheet. Okay, let's look at leverage now. What we are saying is that when a broker, and you are the one that will choose your leverage, by the way, when you are opening your account, you will see that tomorrow when we open an account tomorrow. When you are opening your account, you will choose the leverage you are going to be trading. Let's say you choose 1 to 100 as your leverage. What this means, Sorry. What this means that for every $10 that you put in the market, you will be able to trade 100 times this, which means that you can actually trade up to $1,000. That is what leverage is all about. Your broker will allow you to do multiple of your, and it's not as straightforward. I've said it, it has its own rule. It's not that you can just be entering any trade just like that. Just like, it has its own rule. You can never put the money of your broker at risk. It is your own money that is at risk. What your broker has done for you is, in case you are very good at what you are doing, they allow you to be able to take trade, okay, in excess of the capital that you are having. Okay, all right, you will get to understand this one as we move along. So this is what leverage is all about. Leverage allows you to trade more. If I enter into a trade, let's say I have $200. If I enter into a trade and I have a trade, I have not closed that trade, I have made $50 already on that trade. I have not closed it. My broker, I can enter another trade because the margin of my trade at this point is positive. I can enter another trade. Okay, and if all the trade I am entering is positive, I will have entered more trade than the $200 that I have in my capital. So anyway, I don't want to confuse you more. Let's just know that these are things that you will get to understand a lot more as you begin to trade. Let's look. This one is a little bit technical, but I want to also tell you it is something that you need to know. I will try and simplify it for you. We're looking at the relationship between a leverage and lot size. And you know what we have said, a leverage is what your broker allowed you to trade with your capital. I gave you like a credit amount.
Facility.
Facility is what I'm looking for. Thank you so much. A credit facility to trade. Okay, so you have $1,000, but you can enter into trading in excess of that. Of course, it means that you are trading positively. Okay, and so your leverage determines the fund for trading, the amount of funds that you will be trading. Your lot size will determine the volume of your trade. Remember, I said your lot size is based on those units these units. When you use a micro lot size, that means it is 1,000 units. If you use a mini lot size, it is 10,000 units. I will explain it to us. Let me go to my slide. That's the best place for me to explain this. Look at this. Look at this. I'm comparing leverage and lot size now. Let's say you enter into the market. All you had was $100. And you created a leverage of 1 to 400 for yourself. What it means is that your broker will have allowed you to do 400 times the amount of capital today. That means the fund available for us. Listen to me very well. Now, if the lot size that you choose for this particular trade, and let's say you are doing GU is what? GBP USD. GBP USD is offering 1.2435. That is what the price is. And you are using a lot size of 0.5. 0.5 is what? Is mini lot size. That means is 50,000 units of, that is what you are doing. You will multiply this amount, the price of that your pair with these units, that will give you 62,175. It means that the size of your trade will have been, that means the trade you are entering to will have been $62,175. Okay? Invariably, what it means is that your account has a 40,000 limit. but the trade you are entering requires you to have 62,175. This trade you cannot enter. This is why some of you, you have $100 in your account. You have a high leverage already in your MT4. Now you want to go and choose a high lot size, and the trade will say invalid. Invalid means the trading volume or the leverage volume that is available for you on that particular trade is smaller than the contract amount that you are entering into. I hope that has sunk in for some of you. If you have never traded before, you will need to come back and listen to this when you start to trade. You need to come back and listen. But for those of you who are trading, I believe this makes sense to you right now. Now, let me go to, let me change this to, say you are using $500 now. $500. You know what has happened? The trading volume that you have is now 200,000. It means now this trade is possible for you. Now, for those of you that have ever traded before, you now understand when they will tell you that you need to increase your capital for you to be able to take certain trade. In fact, there are some things that you can't trade. For example, if you want to trade cryptocurrency, you can't have $100 that you want to go and trade cryptocurrencies. There are some things you can't have just $100, and they will not allow you to trade it. Okay, it is because of this. Because there are some items that you are trading, the minimum lot size is 0.1. The minimum lot size is 0.1. That means you cannot trade it with a small amount of money. So the relationship between a leverage and lot size is leverage determines the volume, leverage volume that your broker has availed to you to trade. The lot size determines the contract size of your trade. Okay. Yeah, I know that for some of you that you have even been trading, this thing looks a little bit, you have never heard of this before. I'm sure a lot of people have never heard of this before, but that is how it works. This is what it means here. And this is what it means. Leverage is determines the leverage volume that you are trading, and your lot size determines. Look at it here. In this particular trade, this trade will not be possible for this broker. For this part, is using one lot size, one standard lot size. That is 100,000 units. 100,000 units. This is not possible because the contract amount is 124,000. 100,000 times 1.2435. You have only a leverage volume of 20,000. But you have $500 and you are using 1 to 200 leverage size, which means you have 100,000 leverage volume, and you have only used 0.2 lot size. That trade is possible for you. Okay, that is what it means for all of you. If you don't understand it, just come back and look at this. Maybe when you are trading and then you hit a brick wall, you remember what I've just said to you. Now let's start the calculation for tonight. Let's start the calculation. Our time is fast spent. I hope I've not left anybody behind. If you don't understand what I've said, I am not surprised. That part I just mentioned, because you have not traded before, and the word leverage and lot size is new concepts in your brain, and it's like out for you. Okay. Now let's calculate this. I will take few here, and I will send the rest to you as your assignment. Let's look at the first item there. Euro USD, EU. You are buying, and you enter the market at 1.0829, and then you close the market at 1.0867. So what will be your lot size? What will be your lot size? I mean your pips. Sorry, let's start with your pips. What will be your pips? Let's calculate it quickly. Just type it into the chat room if you get
38.
it. 38. Thank you very much. Is there anybody that doesn't agree with that? Who has? So it is 38. Thank you. I think I have someone that confirmed it's 38 there. Fikayomi has said it's 38 as well. Anybody that has anything contrary to this? We have done this before. This should be easy. Please, I want you to participate, please. I want you to participate. Use your calculator, please. Now, yes, thank you very much, Joshua. Thank you. Now, let's assume that the lot size for this trade is 0.05. Your pips is 38 pips. Your lot size is 0.05. What will be the profit of this trade? What will be the profit of this trade? Let me show you what's lot size of 0.05. What is 0.05? It is 50 cents. 50 cents. So 50 cents times your 38, what will it give you? Who want to type it in for me?
Well, it should be 19.
19.
It should be 19 what?
$19.
$19. Thank you very much. $19. Okay. Remember, this is a buy. In a buy, you entered, the price here is lower. 1.0829 is lower than 1.0867. That is why we knew it is a profit. Okay. That's how we knew it's a profit. Now let's look at this other one. You enter is a buy, GU 1.2390. That's the entry price. And you close at 1.2368. What will be the pips for this particular trade? Please tell me.
22.
Is it a profit or a loss?
It's a loss.
It's a loss. So if you apply a loss size of 0.5, what will be the amount of loss in that trade?
$11.
No,
Are you sure?
100.
It can be.
$110.
$110. That is what it is. That's what it is. So that is a loss. I want to believe we got it. Now let's do this sell. Let's do this sell. The sell, we are selling now Euro card 1.5347. You sold at 1.5347. Then you close the market. That means you buy at 1.5302. What is the P there? 1.5347, 1.5302. What is the pips there? Amount
45.
of pips.
45.
Is it a profitable pips or losing
profit?
pips?
Profitable
profit.
profit, yes.
Is a profit because in a sell, you sell high and you buy low. So you have sold at the higher, 1.5347 is higher than 1.5302. So this is the profit. If you use a standard lot size of 1.0, what will be your profit in this case?
45.
45
$450.
$450. Thank you. Yeah. All right. Now I have some sharp people in this house. Now let me just be sure I am carrying everybody along with me. Is there anybody that doesn't understand what we have done thus far? Yes.
Yes.
Yes. Thank you very much. Okay. Now, we will go back to the drawing board. Let's go back here. Let's go back here. We entered the markets at a particular price. So when you enter the market at a particular price, you close the market at a particular price and you get the pips. I believe all of us can get the pips. Madam, you know how to calculate the pips. The difference between entry and close, do you know? Just tell me.
Yes.
You understand that one? That is very fundamental. So what is your challenge is to know which one is profitable, which one is losing. Is that a challenge?
Yes, please.
Okay. Now, just like I explained to you here, that if you are selling bag of rice, you are selling bag of rice. When you buy stock into your store, you have to buy price at a lower price, or whatever price that you buy into your store. When you are selling, for you to make a profit, you must sell it higher than the price that you bought it. Is that not the truth? Can you confirm to me I'm saying the right thing there? You buy at a lower price and you must sell at a higher price. If you buy at 8,500 a bag of rice, okay? If you sell at 19,000, someone told me this must be Nigerian rice, Abi? Yes, Nigerian rice. 18,500, and then you sold at 19,000. You have made a profit of 500. But if you go and buy this rice, let's say you bought it at 20,000 naira, and somehow the market has moved against you. Maybe after you bought your own stock, someone now offloaded trailer load of a bag of rice into the market. And you know what we talked about yesterday? Demand and supply. Once there is so much supply in the market, what happened to price? Can someone confirm to me? What happened to price?
The price falls.
crashes.
The price will come down.
Crashes.
Because there's so much bag of rice in the market, then suddenly bag of rice is now going for 19,000. People are now buying rice 19,000 in the market. That means they can buy it at a lower than your own 20,000 for them to sell at 19,000. You that you have bought at 20,000, you are in trouble. And because you don't know if this price will come further, maybe right now, it is now being sold at 18,700. You don't know if the price, what if you assume that, don't worry, this thing will still come up. Maybe something will happen. Another trader, ship load of bag of rice from wherever it's coming from, arrive again, price crash further to 17,000. Now the market price is now 18,000 naira. Meanwhile, you are still sitting with your 20,000 naira bag of rice in your store. Please, let's mute ourselves. Please, so that we don't disturb the price. So I'm giving you the foundation of buying and selling right now. We talked about this yesterday. We are doing it practically right now. That is how it is. So whenever you are in the market, whatever you close with in a buy must be higher than whatever you bought it originally. If you are selling, and I have told you it is possible to sell before you buy, it is possible, at least in this market. Even whatever you're doing, it is possible. Okay? So whatever you sell, you must have sold at a price such that when you are buying back, you are buying at a lower price. You must have sold at a price such that when you are buying it, you are buying at a lower price. That is what we are talking about. So when we are talking about this particular one right now, you enter the market at a particular price. Let's say you are buying now. So you enter at this price, 1.0831 is what you bought. 1.0876 is higher than this. I'm sure you can see that. It means that if you sell at this, you have made a profitable pips of 45 pips. That's what it means. Do we understand it now? Do we understand it? This is what it is here. In a buy, for you to be a profit, the entry price must be lower than the closing price. In a sell, for you to be a profit, the entry price must be higher than the closing price. Now, let me quickly add one thing to it. Whenever you are also trading a pair that includes JPY, JPY pairs are in, let's say, GBP, JPY. JPY means Japanese yen, by the way, Japanese yen. If you are trading Japanese yen, it is because Japanese yen relative to all these other pair, it shows in hundreds. So we can have 120.35347. Okay? It comes in 3 digits after the decimal places. That is for JPY. So when you are calculating JPY, you use only up to the second digit after the decimal points. So you will use, in this case, we will let go the 7 and we will only consider up to 34, 120.34. So when we are looking at JPY, any pair that has Japanese yen, you are going to be using only 2 decimal places after the, only 2 decimal places in the computation of the price, okay? Is that one should confuse you, please, eh? Don't tell me that I've not said anything at all. So that is why you see everything that is JPY here, we see it in hundreds, 116.45. If you see another JPY here, NZ JPY, 64.28. Okay, so you see it in 2 decimal places. So don't forget this is possible. Now let's just do one for JPY so that we can get ourselves. Let's look at this trade. This buy NZ JPY, you bought at 64.28 and you close the market at 65.04. What is the amount of pips here? 64.28 is lower than 65.04. So this one should be a profit. So it should be, okay, what is it? What did you get?
76.
76 pips.
Yes, 76.
76 pips. It's 76 pips. I hope you got it. It's 76 pips. Okay, that's 76 pips. All right. So if you are going to use this lot size with your 76 pips, what will be the profit in this case? What lot size is 1.20? Let me ask first. Type it in. What lot size is 1.20?
Standard
Lot size. So what is it? What is it? Per unit is how much? 1.20. Per unit is what?
$12.
$12. Thank you very much. Remember, 1.0 is $10. 0.2 is $2. Did you get it? 1.0 standard lot size is $10. Abi? 1.0 is $10. Then 0.2 is $2. So it is $12. Okay? I hope that is not too difficult for anybody. So if you multiply 76 times times the $12, that's how much?
$12.
How much?
$112.
Thank you very much. $912. Now, for everybody on this call, oh, someone is asking me how do you get to the chat? Well, you just do the chat. You just type into the chat now. No. How do you get the chat? What do you mean by the chat? Okay. Chat with me later. I don't know what you mean by this. Oh, okay. That chat. We will talk about that one tomorrow. Sorry about that. So I will give you the rest of this one to go and practice with. Okay? Now, let me just twist your head a little bit. Just a little bit. Look at this one. GU, you bought, you are buying 1.2401. You add a profitable PIP of 34. Profitable PIP of 34. What will have been your closing PIPs? I'm sure you can do this one. Can someone calculate it for me? Type it in.
401.
Close at 1.2435.
Type it in 1.2435.
Yeah.
Okay. Can everybody get that? Who cannot get this? I'm sure all of you should be able to get this. These are just simple twisting of things. Okay. And remember, we did this before. 1.2435 is what this. So if you want to calculate the loss side with it, you can get this easily. Now let's look at the second one, Euro USD. You are selling, and the entry price is 1.0835. The pip is a losing pip, is a loss. So you lost 25 pips in this trade. What will have been your closing trade in this particular trade?
1.0815. 10. 1.08.
Someone is typing it in for me.
1.08.
Adu, please check again. I think you just made a small mistake somewhere there. Check again, check again, check again. 1.08.
10.
10. Eh?
Yeah.
Okay, let me just write it down. 0.835. 25 pips losing. Let's go to that board again. I need all of you to understand this. Let's say this is, what is that pair? Can't remember that pair. Whatever it is 1.0835. That's the price. Just let me make it full. And now we don't know what you close with, but we know that the loss size, the pip is 0.0025, and it is a losing, sorry, it's a loss trade. Remember, we are selling now. This is the sell. This is a sell. We are selling now. And if it's a loss, you are selling. For you to make a profit in a sell,
higher.
That means the price should have come down for you to make a profit.
Well, this I went higher.
So for this to be a loss, means the price had gone higher.
Above.
So what will you do? You are going to add 25 pips to this one. So when you add it, you have
1.0860.
1.0860. Thank you very much. Who have I left behind? Who is still in the forest there? Who have I left behind? 1.0860. Who doesn't understand what we have done here? You better speak up now. I'm sure this is very simple. In a sell, for you to make a profit, the price has to come down. So if you have made a loss, it means that the price had gone up. Remember that our friend with a bag of rice, he has sold the rice at 18,500, expecting that he can buy it at 18,000 in the market. Unfortunately, price had gone up without him knowing it. And so when he got to the market to buy back, if they told him it is now 19,000. So it's a loss. So in a sell, your buyback or your closing must be lower than your selling. Okay? Okay. All right. Now, my time is fast spent, but I still have two major things I want to discuss with you. Okay? Stop loss and take profit. And I know that we have talked about, all of you know what stop loss is what? Stop loss is stop loss. Loss, when you stop your loss. It's very simple now. When you stop your loss, your trade is going into a loss, but you have put in there, if my loss reach a certain amount, stop this trade for me. When you are entering into a trade, at the beginning of tomorrow, we are going to take a trade. Don't worry. As you enter into a trade, you will put your stop loss. You have put your lot size there. you have put even your take profit there. What it means is that you have indicated as you enter into a trade, all the things that you expect from that trade. If the trade goes into a loss and it reaches that amount of loss, it means the trade will close automatically. And remember what it means? You have computed what is the acceptable loss to you. You have computed it. Usually it should be about 1% or 2% of your capital. So if that loss happens, well, too bad. You can take another trade because it's only 2% of your capital you have lost. But if you did not put a stop loss and the market goes far down, you could lose all your capital. The other side is take profits. Take profit is the opposite of stop loss. You are indicating that if I enter into this trade, if I make this amount of profits, it is okay, close this trade on my behalf. And each one of these things, you measure it in lot sizes, okay? And let me just quickly show it to you here. See, we talk about how do you set your stop loss or take profit when you are selling or when you are buying. See, in a buy trade, listen to me very well. This sounds technical, but it is the simplest of all. In a buy trade, when you are buying, what do you expect to do? You want price to go up. So when you enter the market, look at this one. When you enter this market, you want price to go up for you to make a profit. So you are going to set your take profit up here. You say you enter the market at 1.33310. You want the price market that once you reach 1.3360 is okay. So you enter that take profit there. Your stop loss is the other way around. Your loss is when market begin to go lower than when you buy. That is your loss. So you put it there. If this trade I enter at 1.3310, if you get to 1.3320, stop this trade for me. I know I'm not interested again. Do you understand what I've just said? Who doesn't understand this one? Is this okay?
Okay.
Can you just type yes? If you don't understand, type no, please. Quickly. In a buy trade, I'm talking about buy trade right now, your take profit is up. So when you enter a market, okay, Chai says he doesn't understand it very well. Okay, now when you enter into a trade, into the market, you are buying, you put your entry price, you are buying. You want market the price to go up for you to make a profit. Okay? If the price begin to go lower than where you enter, that means you are making a loss. Okay? If you are selling something, you bought it at $100. You bought it at $100. You are saying that if I make $20 on this trade, it's okay for me. You will set it in your trade. Maybe because you have not set a trade before, you don't understand what I'm saying. Don't worry, tomorrow we will set a trade. Can we please mute our system, or you want me to mute everybody? If I mute you, you will not be able to talk again. That's why I'm being careful. Please, let's mute ourselves so that we do not mute. So we are saying that when you enter, you add $100. The price going up is where you want price to go up. You want price to go to 120, so that you can make a profit of $20. So if the price move from here to here, that means you have made $20, and you have said that if you just close the market. But just in case the market did not go my way and price go down, if the price go to $95, close this trade for me. Remember, whenever you enter the market, price is always moving. Price is always moving. And when you want to close, you are going to close at the market price. So if the price goes up, you close your trade, you make profits. If the market is going down and you are in a buy trade, that means your capital is reducing. You'll be seeing your capital reducing yourself like this because your trade is at $100. Price is now $95. Your capital has reduced by $5. If the price goes to $90, your capital has reduced by $10. Do you understand what I'm talking about? That is how trading is done. That is for a buy. For a sell is the opposite of it. In a sell, you want price to come down for you to make a profit. You want price to come down to you to make a profit. When price goes up, that means price is going higher than your selling price. That means that is a loss. So you set your stop loss higher than your selling price, and you set your take profits lower than your selling price. That is what all this story here means. We are going to put it to practice now. I know 10 o'clock is here. You need to give me some time. Normally, on a day like this, that is how it is. With 2 hours is never enough, especially if you want to carry everybody along. Calculation of piece in a take profit buy. We're talking about take profit now. Your take profits, okay? You enter into a GU. I have used 5 digits here. So whenever you are calculating, make sure that your calculation is, for up to just the 4th digit, okay? Entry price 1.2214. TP is 1.2245. The pips here, your take profit, the pips of your take profit is 31. If you look at this difference, the pips is 31. Okay, I've done it. That's why I know it's 31, and I'm sure all of you can confirm this. If your lot size is 0.01, that means it is 10 cents for every pip. 10 cents and 31 is $3.10, $3.1. That's the amount of profit I will have made. This one, take profit will mean you are making the profits. Okay, now the same thing here. If you calculate this one, if my take profit is 1.4614, and I had entered the market at 1.4587, the number of pips here is 27, and I'm sure all of you can confirm that. Okay, I'm not just waiting for you to tell me because of time right now. If you multiply this with your lot size, 0.02 means is 20 cents. 20 cents times 27 pips means it is $5.4 that you'll have made. Okay? And I'm sure I have explained the one for you, USD JPY. For you, it is only 2, you only consider the up to the second digit here, the second decimal places here. And you can see the same thing here. If this is a buy for a take profit, if you are doing a sell for a take profit, it is the reverse. Remember what I said about a sell. A sell means you must enter at a higher price and your take profit will be at a lower price. Remember what I said. Take profit in a sell is at a lower. It must be lower than what you entered. 0.9029 is higher than 0.9012. You have sold higher than your take profit. 17 pips, and you can do this calculation. I'm sure all these ones, you should be able to do it now. Now, same thing for stop loss. That was take profit we just talked about. Stop loss in a buy, your stop loss is lower. Your stop loss is lower than your entry price. So when you enter at 1.1262, your stop loss must be lower than this for it to be called a stop loss. That means 37 pips lower than the entry price is what this is. And if your loss size is this means this is the loss you will have made. If your trade hits your stop loss, that means it is a loss you have made. It can't be a profit again. It's a loss. So the amount of loss is what this will show you. If you enter a USD JPY, and the entry price is 107.26, and your stop loss price is 106.85. This is a buy. This is a stop loss. This stop loss is lower than your entry price. If you calculate it, you will get something here. If you multiply with your loss size, you will know the amount of loss you will have made. I'm sure you can do this calculation yourself. Also, on selling, in a sell, your stop loss is higher than your entry price. You enter at 1.3569, your stop loss must be higher. At 35 pips, it is 1.3603. If you apply this loss size, you can get this total loss that you have made. So this is how it is done. Okay, this is how it is done. And I'm sure that I hope nobody is having difficulties with what we have just done right now. This is something that, as I told you, this is the only place where you bring a calculator in this training. This is the only place you bring a calculator. But as you can see, for you to do well, for you to be able to do well in trading, you must know how to calculate your profits. You must know how to calculate your losses. You must know how to calculate your risk. All we have done today is how to do this. How do you determine what size to use for stop loss? Now, that one is a different bottle of fish entirely. Now, your stop loss, there are several ways, and I think tomorrow we will look at that. But you will be the one that will determine what you want to be your stop loss or your take profits. Remember what I told you earlier on? You can say, I don't want to take a loss more than 1% of my trade. Not more than 1% of my trade, of my capital rather. So if I'm trading with $1,000, what is 1% of $1,000? $10. So that means the maximum loss I will be willing to take in any trade is $10. And I will calculate that pips into my trade. Remember how we did it just now. I can calculate that pips into my trade, $10. And I will say this is the stop loss that I want in my trade, $10. If I'm also calculating my take profits, it is me that will say, in this trade, I want to make 50 pips in this trade. That is my take profit pip in this trade. And I will set it into my trade. If the trade goes that way, it will stop and it will give me my profits. So it is you that will do this. Now, let me see if there are questions that I have not answered. Is there a question I have not answered? I will drop the video. Don't worry. Tonight, you want me to watch it tonight? Okay. I will tell my technical person to please work on it. And it might not be available immediately because it is on YouTube. Okay. It will have to do the download. It takes about 2 hours sometimes to do the download to complete. Okay. So you might not see it immediately we finish this class. How to determine the size of, I think I've explained that one. I have been disconnected since. I don't know what is happening. Oh my mercy, I'm so sorry. You know, the beautiful thing is that you can watch this again later tonight once it has been dropped. How do we know the right broker to go with? Big question. Sometimes you may have to do your due diligence by asking around, by asking people which one is the better broker, because I know a lot of you have this in thinking that some brokers are not so good and things like that. But really, over time, you will know. And remember one thing, you can change your broker anytime. If one broker is not doing very well, you close your account there. You tell them to transfer your money to your account. You go open an account with another broker. You transfer your money to that new broker. You can do this you can even have multiple brokers at any point in time. There are some brokers that cannot do certain trade that you want to do. Maybe you want to trade in a particular commodity. It's not all commodities that all traders are into. Some brokers don't do cryptocurrencies. So you might not be able to trade everybody. All right. Okay. Oh, Mr. Adebayo is raising your hand. Okay. Just only one person. I don't have time. I'm hoping that I can unmute you, Mr. Adebayo, to ask your question. I hope my chairman is in the house already.
Hello?
Yes, yes, sir.
Can I move on? All right. Thank you so much so far. I want you to give us the clear of the broker you are using presently, sir.
You want me to, let me tell you, I'm using Infinox right now.
Okay.
And Infinox is, because I have done my due diligence, and also because I know the people that brought Infinox into Nigeria. I know that they have something better than some of the brokers that I was using before. Okay, but it doesn't mean they are the only one I'm using. I have other brokers that I also use as well. You understand? So those ones are there. Right. Now let me see whether Mr. Popola is in the house. Is he there? Oh no, he's not. He's not. I know he was in one other meeting before.
Can I quickly ask a question before you round up?
Go ahead, sir. Go ahead, sir. Linus.
Yeah, can one have 2 or 3 different accounts with the same broker?
Yes, you can. You can have account. You can have accounts. They have different types of accounts. You can have multiple accounts with a broker. That is true. You can do that one. It is possible. Okay. So if you are choosing Infinox, you can have an account and you say on this account, I'll be using only standard lot size to trade this account. Or this account, I will be using this account when I want to take the maximum risk. And people do this. You put $200 in an account and you want to trade the market, the fundamentals, news, and you say this, I will put one standard lot size on this trade. I'm ready to lose this $200. But if it goes my way, I know I can make $2,000. So you can do that. But don't do it if you don't know what you're doing. All right. All right.